We are about to begin another episode of the Prosperident webinar series. From their unique perspective as dentistry's embezzlement experts, Prosperident's team brings you information you will not find anywhere else. Now sit back and relax while Prosperident's Amber Weber, Wendy Askins, and David Harris address the issues that are important to you.
Hello, dental family. Thank you for joining us for the Prosperident CV19 webinar series. This particular webinar is going to talk about Reconcile or Reckless. You decide which one you want to be. I'm joined today by Amber, the amazing Amber Weber, as Dave said, and our beloved CEO of Prosperident, David Harris. And as we are winding down this webinar series and we're all getting back to our practices, we just wanted to take a moment and tell you how honored we are that you've joined us for these webinar series, and that we hope we've blessed you as much as you have blessed us. And with that, you can take it away, Dave.
All right. We've got a couple more things here that aren't totally accurate. This was supposed to be our last webinar. We had a lot of people register for today. Unfortunately, some of them are still trying to join in with us, but we've had a lot of registration. Wendy, Amber, and I took a vote, and we decided that we will do one more next week. So next week will be a really interesting topic. It's going to be how to fire people. We talked a couple of sessions back about how to hire them, but people probably need the other end of the story as well. So we're going to extend by 1 week. It'll be the same time next week, and we understand that people are getting back to work, and some of you may not be able to join us live. That's totally fine. As you know, we record them all, and they're all available on our website. Also, some people have been asking about CE certificates. We just waited so we could do that all at once, and we will have CE certificates for all of our sessions except the very first one on April 8th. So we'll be addressing those. But like I say, we wanted to do those all at once. If you have missed a session and you want to get it, the red arrows on the screen show you where to go. So that's our website. You can see that there's a menu item called In the News, and the first option in that menu is called Prosperident Power Hour Webinars. So that's got all of our past webinars. It's also got some of the interviews that we did with some clients that were featured last week. You know, in the webinar, we cut those down quite a bit, but the full interviews are there as well. So all those things are on our website. Today's webinar, of course, is being recorded. It takes about a day for us to get it back and get it on the website, but it will be there by, I'd say, at the latest noon tomorrow. Our webinar, as usual, will last about an hour. We started a bit late just to help some people try to join. And we'll have some time for questions and answers after. I'll say what I always say. If you have questions, put them in the chat feature in Zoom now. Put them in when you think about them, and then we'll take as many as we can at the end. Also, as you know, some questions are really more of a private issue, and you may get a response from one of us saying, you know, just contact us later and we'll be happy to deal with those. And we always give our email addresses at the end for contact purposes. The other thing I'll mention is that, like always, we're giving away some toolbox items. Today's giveaway is one we've given before, but it's right on point for what we're doing today. It's called our monthly monitoring spreadsheet, and we'll probably talk a little bit about some of the things it does. But you will get a link to that in the email that goes out about 4:30 p.m. Eastern time today, right around the time that we end. Wow, that was a lot to say. Let's start with a couple of definitions, and I don't think you're going to find these in a dictionary anywhere, but these are the way we're going to talk about things. So we talk about two different activities, and one is balancing, and balancing is what staff do. And you can see what it's trying to do. The primary purpose is to make sure that the bank deposit agrees with, and I assume we all know this, but I'll say it, PMS here refers to practice management software, not the other thing. So we want to make sure that the deposit agrees with the software and that no treatment has been missed or left out. And there are also some procedures that staff do at the end of a month to close that month out in your software and elsewhere. So when we talk about balancing, we're talking about the staff activities. When we talk about reconciliation, we're talking about normally the practice owner. In some cases, in a really large practice, this might be the office manager who's doing this stuff, and also some things that could be outsourced. So here we're talking about supervision of the activities as opposed to doing them, and we're not really intending here to teach doctors how to do their staff's job, because that'll just make a huge mess in every practice. What we're really talking about is how to supervise that job, and that's going to be a lot of our focus today. I love this guy. I remember him from when I was a kid, the Tasmanian Devil. In really broad terms, there are two kinds of embezzlement. And the first one I call reconciliation theft. So this happens if either there's no reconciliation being done in a practice, or there is, but it's incomplete or it's ineffective. If I'm a staff member and I realize that nobody other than me is taking an interest in whether the bank deposit lines up with the practice management software, stealing's really easy. All I do is short the bank deposit. So the practice management software says that $2,400 should be going into the bank today, and I deposit some lower number. This is easy theft, and it happens when there's no oversight. If the balancing activity is supervised, now what I have to do is what I call concealment theft, and that means that I have to do something to individual patient accounts so that today looks like it's going to balance. This is a lot more sophisticated. So I guess what I'll say is really the primary purpose of that oversight or reconciliation process, if I can be a little facetious about it, is to weed out the stupid thieves or the lazy ones and make it so that at a minimum, if somebody's going to steal from you, they have to work a little harder at it. One thing I want to tackle specifically is that I hear a lot of doctors when they call me initially and they're talking to me about the possibility that their practice is being embezzled. And one thing they say to me is, but I protect myself because I take the deposit to the bank myself. And I got to tell you that activity is not nearly as valuable as people think it is. The question I ask a lot of these doctors next that kind of stumps them is, okay, but how do you know that the amount that you left the practice with was the right amount? And that's where the shoulders kind of get shrugged and somebody says, well, I guess when you put it that way. To me, what's more important than who carries the money to the bank is that the practice owner can confirm that the amount that left the practice was the right amount and the amount that showed up at the bank was the right amount. So you don't need to do the deposit to do that. All you need to do is have online banking and have a concept of what the right amount should have been. And that's what we're going to talk about in a few minutes. The other danger I'm going to caution people on is relying on daily data and not looking at monthly data. I know a lot of doctors, for example, who will look at the merchant account, and the merchant account, just to make sure everybody knows what we're talking about, is the facility in the practice for incoming credit card payments. So that swipe machine that you have, that's tied to the merchant account. So people will look at the daily tape from the merchant account and compare it against the practice management software. And if those two line up, as far as they're concerned, they're fine. The problem is your practice is not open 24 hours a day, and it's not open 7 days a week. In fact, right now it's probably not open at all, but in normal times. So you can look at a tape that comes out of that machine and balance it to the practice management software, and then somebody else can come in and do more transactions at night. So we really need to look at monthly stuff as well as daily stuff, because things can happen outside of when the practice is open. So there's a definite danger in daily in relying on daily stuff. Amber, I think you're muted.
Is that better? Okay.
That's way better.
Right, great. So let's think back to about 30 years ago. It used to be a lot more simple when we needed to track what happened in our business on a daily and monthly basis. This makes me think back to my first job I had, helping at a restaurant back in the 80s, where you'd swipe the credit card and you thought you were really cool because you were running that swipe. And at the end of the day, all of the different types of payments that you had received were separated in a paper amount. You know, your receipts for credit cards, cash, checks, everything was a paper trail, and you took that physically to the bank. And so that's how you were able to track what went on a daily basis. We were able to look at everything in a physical paper trail. Now, fast forwarding 30 years to current day, things have gotten a lot more multifaceted. There's so many different ways now that we are able to take payments in our business. Credit card, which is electronic, insurance companies, not all insurance payments now are in a check. Patients can pay online and different ways to pay. So now when you go to Reconcile and look at your business on a daily and monthly viewpoint, there's so many different things that you need to look at in the details. And because of this, we see a lot of owners who want to ignore those electronic deposits or the ways that they don't see physically on paper. So that's what we want to really highlight on today, is look at that multifaceted view and focus on all the small details. As I mentioned, 30 years ago, it was much more simple. A lot of owners and staff will have objectives to reconciliation, or they may not really object to it. They just may seem that it's too complicated or there's too much to look after. But having these systems of looking at everything on a day-to-day and a monthly basis helps you and your staff know they're doing their jobs correctly, helps you make sure that all the errors are caught early on, and will ensure the integrity and preservation of your information moving forward, so that you have a great reference point to look back on when there are areas of concern in your practice. And you and your staff can work together as a team and make sure that this is a good systematic way to do this. Also, our practice management software is a separate type of record keeping than our actual banking. And so having this system allows you to close that gap and make sure that there's less room for error and you don't hit a big bump in the road. And as Dave said earlier, this allows us to detect certain types of embezzlement from the type of thieves who are not as talented mentally to hide the more simplistic type of hiding money from you.
Yeah, this is this is the thing that a lot of people miss. You kind of have these two independent processes going on at once. And on the left side of your screen is your practice management software. And you can see the inputs for that are treatment, adjustments, and payments. And while practice management software is capturing your revenue, at the same time, your expenses are being tracked using accounting software. And there are two inputs into accounting software, being those expenses and what happens in your bank account. So by accounting software, I'm talking about something like QuickBooks, which is what most practices use. So we've got these two things going on at once, and you can see the wall in the middle. They're not talking to each other. And we talked in a previous webinar about why so little of embezzlement is caught by somebody's accountants. And it's not because your accountants are bad accountants or lazy or anything else. It's simply because what happens on the left side of your screen is invisible to them. So one of the purposes of reconciliation, as Amber said, is really to bring these two things together. And when we reconcile practice management software against the bank, for example, now we've crossed over that wall and we've linked the two sides. So that's a really important outcome of the process. Otherwise, these two cannot agree with each other, and nobody, including your CPA, is likely to notice.
Dave, that is such an important point, that we actually have two systems that are completely independent of each other. They're not dependent on each other. And so that's how transactions or how funds can be hid from one system or the other. So what information do you need and where are you going to get it from? The very first, most important thing is, look, if I'm an embezzler, do you think I'm going to give you the reports and the information that I want you to see so that you can catch me? What I'm going to do is give you the information that I want you to see. That's why it's imperative that when we talk about reviewing reports from your practice management software, that you generate those reports on your own. Another issue we have is that many people don't realize that your software can sometimes lie to you. So we know that data lies to us, so we really honestly can't put 100% faith in it. So what we need to do is we need to go to third-party sources. Now, basically what that means is that we need to get statements from the companies that are outside of our own business, outside of our own practice, because that's what's going to tell you exactly what was deposited. So for example, your bank statement, your merchant statement, your care credit statement, your lending tree statement, your Ortho Bank or Banco or OrthoFi statements, all of those need to come to the business owner directly so that they can't be manipulated in any way. And while I'm on that subject, I'll say if they're going to come to the business owner needs to open them up and take a look at them. Yeah, you might not know exactly what it says or what it means, but just open them and look at them, then put them back in their envelope and send them off to whoever who needs them for reconciliation. We also need to have a checklist. We're talking today about some reconciliation processes that can occur on a daily basis and on a monthly basis, but there are bi-monthly checklists or bi-monthly tasks that need to be done. There are annual reports that need to be done. We recommend that you have a checklist so that you don't accidentally forget what needs to be looked at. And then finally, we need to verify and trust our employees and the actions that are happening, that are going on. But one thing that we know is that we can't prevent embezzlement. The only thing that we can do is we can catch embezzlement when it happens, and we can put ourselves in a good position, in a secure position, so that if we notice something that doesn't look quite right, we'll be able to go back and gain access to those resources. And the way that you do that is that you keep your reports that you've generated yourself and copies, electronic copies of your statements in a secured storage, be it at your home or a locked cabinet in your office, or if you choose to store it digitally, that's a great way to do it too. Anyway, so it's important for us to verify what our trusted employees are telling us. And for those of you that were with us last week, you'll remember our friend, Dr. Craig Scott, who's an excellent businessman and an excellent clinician, gave us a few words of advice because of his situation and his embezzlement that occurred in his office. So here's some relevant information about why we always need to verify what we're being told is actually true.
So, well, I'll take a look at it. I'll see what's going on. So I ended up visiting with our financial coordinator, mentioned what I just heard. She said, you know what, let me take a look at it. I'll figure it out. I said, all right, just let me know. A couple days passed. I went back. I said, so did you find anything out on that? I said, yeah, they just forgot to enter it at the front desk. I got it entered. It's all taken care of. No problem. I said, all right, great. Thanks. The same person who initially visited with me comes back to me and says, so what did you find out? I said, well, I talked to her and she said, they just forgot to post it and everything's fine now. The contract's entered. And she said, was there a deposit slip? I said, I didn't ask. So I go back, I say, you know what, that patient we talked about, I went back to our financial coordinator, that patient we talked about, do you have a deposit slip for that? He said, yeah. I said, okay. Because I'm thinking, she's not going to lie to me. She's not going to be so brazen as to say, yes, I've got a deposit slip and then not be able to show it. So I said, that's fine, great. For a third time, this employee who initially approached me says, so what did you find out? And I said, yeah, she said she's got a deposit slip. And then this employee looked at me, kind of cocked her head, kind of like this and said, did you look at it? And I felt at this point like, when your mom told you to do something and you got to go through all these steps to do it. You know how to do the job, but you're kind of like, well, I just want to do enough just to get by and maybe we will find out that there's nothing to this. And that's what I was doing.
One more time, I want to give a shout out to Dr. Scott for being brave enough to come forward and share his story with us. And unfortunately, he found out too late that there actually wasn't a deposit slip and he was being lied to. And his case is in the middle of prosecution right now. So again, we wish him the best of luck and thank him for speaking out for us.
For sure. I'm going to show you a little trick here that will make one part of your life and your staff's life a whole lot simpler. What we're talking about is how to deal with cash in the practice. And the thing that a lot of dentists do, and this is kind of out of step with the way that most other businesses function, and it gets them into trouble, is they have a cash drawer and two things happen in that cash drawer. Money comes in from patients, and sometimes money goes out because you've got to pay an expense in cash. And that always makes the reconciliation of the cash a bit of a challenge. So here's what you do instead. I'm going to introduce two concepts, and the first one I call float cash. And float is used for only one purpose, and that's to receive money from patients and I guess to make change for them when they don't have the right change. So float cash starts at a constant amount, and I've just used $500 here. Maybe if it's a bigger practice, it needs to be more, but there's some amount that the practice starts every day with. And then two things happen. Cash comes in and cash gets removed and deposited. And the important thing is that those two are the same amount. So today, if we receive $1,300 in cash payments, $1,300 gets set aside to be deposited, and we're left with the same amount we started with, $500. And this is kind of foolproof. As I say, what messes it up is when somebody in the practice doesn't have enough money to buy lunch, and they end up taking $20 out of it and putting an IOU in, because now you don't have $500, you have $480 plus an IOU, and until that IOU is paid back, which might be payday, you've got to account for that every single day. Here's what you do. let's have a separate place, and we're going to call this petty cash. And the way petty cash works is really simple. Same kind of thing. We start with a constant amount, and here I've used the number of $200. So there's $200 in petty cash to start. Now, of course, stuff happens. Like we do a pizza lunch and it's $60. And we pay in cash. What that means is at that moment, the petty cash has $140 in cash plus a $60 receipt from the pizza. Okay, and the important thing about petty cash is it always adds back up to $200. There's no other way to do it. So then a patient's car breaks and they're going to miss their hygiene appointment, so we tell them we'll pay for a taxi. And that's another $35. So same thing. Now we're down to $105 in cash and we've got 95 in receipts. It always adds up to 200. And at some point, the petty cash gets low and we need to restore it. And the way that that happens is the receipts get sold back to the doctor. So there's a custodian normally for petty cash. This really needs to be one person. So the custodian gives his or her receipts back to the practice owner, and the practice owner writes a check to the custodian for the same amount. So in this case, it's $95. Okay, and where do we end up? Exactly where we should be. We've got $200 in petty cash. So the custodian is responsible for always having either $200 in cash or a combination of cash and receipts that add back up to $200. And if we separate these two, that is petty cash from flow cash, life gets a whole lot simpler. You only have to reconcile the petty cash probably once a month. Float cash really needs to happen every day. So that's a simplified way of handling cash, and it will save you many, many headaches in your practice. And the rule is really simple. We never, ever, ever disperse float cash to cover any outflow.
Dave, I love that analogy, how it simplifies everything. So moving forward, let's talk about keeping your end of day simplified. As a practicing hygienist and an office manager, one of the main things that I think is really important is that you have each provider of your team look at their own day end report so that they can see that everything that they completed for the day is accurate and has been entered into the system the way that it should. When I was a hygienist, I had a lot of days where I had an assistant helping me. So at the end of the day, it was a great closing conversation that I would have with my team and make sure that everything I completed on patients had been posted to their ledger and had been submitted to insurance. And so it created a good team environment also. And then when we were able to double check that, we knew as a team that that information was going to be relayed to the doctor or the owner in an accurate way. And it allows everybody of the team to have that good cross-reference, have that good system. And then I was, I would sign off on that report, and it would make me feel like I was really invested in the health, the financial business part, how I was contributing to the practice. So that's one thing that I would recommend, is to allow each provider, doctor or hygienist, and the assistants that help, to have a closing duty that focuses on the details of what happened for their day.
Also shout out. Oh, I'm sorry, Amber, were you finished?
Good, yeah.
I'm sorry. Hey, no, Dave, can you go back?
Sure.
I wanted to give a shout out to my ortho friends. I'm sorry I jumped in, but I get so excited about production. Anyway, shout out to my ortho friends. We generate production a little bit different, or quite a bit differently, and we track our production quite a bit differently as well. But when Amber's talking about checking to make sure that the procedure is correct and that the fees are correct, we in orthodontics can do the same thing by ensuring that all of our new start contracts are put into the computer correctly, that we've got our down payment represented, that we've got our net treatment fee in the computer correctly, our down payment correctly, and any discounts or anything is listed on that. So when Amber talks about individual procedures, that translates to new patient starts, production, and orthodontics. Hey, can't leave my peeps out, right?
Yeah, you do. All right.
Okay, Dave. So let's talk about what your staff does, or what the staff members do at the end of the day. Now that we've made sure that our production is correct, we need to make sure that our collections are correct. So at the end of the day, the manager, it doesn't have to be your office manager, it could be someone that assumes that responsibility, a treatment coordinator, or receptionist, whomever. They print out the day sheet at the end of the day, make sure all payments are posted, and then print out the day sheet at the end of the day. And I'm going to suggest a really old-fashioned way to do it, which always works perfectly. Take the payments that you have in front of you, the physical payments, and separate them into categories, payment categories: insurance checks, patient checks, credit cards, however many payment methods you have listed on that particular day sheet for that day. And for the physical payments that are sitting in front of you, you're going to pick them up and you're going to just start adding them together manually. Once you get a total for that particular payment method, then you look at your deposit slip that's been generated from your day sheet and you make sure that they match, right? We don't just automatically trust that those numbers are correct. There could be a human error. Instead of, $100, it could have been $110, and we accidentally typed it in incorrectly. So we're not only looking for theft, but we're also looking for accuracy and transparency between each other. So once the office manager person has done that balancing, then they're going to give it to someone else to do it, because 4 eyes are better than 2, right? So we also want someone else to look at it.
What are you saying here, Wendy?
We want someone else to look at it just to make sure that it's correct. And after that person has looked at it and made sure that it's correct, then both employees need to sign off on it, right? Just initial it, sign your name, or whatever. In case there are any questions in the future, we want to know who we can go back to get the answer for those questions. And then lastly, the person acting as the office manager, or the person responsible for printing the day sheet in the first place, puts the owner's packet together, which is any specific reports that the business owner requests, the end of day production reports that each provider has signed, the end of day batch record from your merchant terminal, a copy of the computer generated slip. I see a lot of doctors who will just look at the hand printed slip, deposit slip that comes from the bank, that's filled out by a staff member. That's not good enough. We want to see, or you want to see as a business owner, the actual computer copy that comes out of the practice management software. And then if you are a business owner that likes to take funds to the bank yourself, that's when you would also take custody of those payments, right? So then that owner's packet goes to the business owner. The day is closed by the office manager. The merchant terminal is closed, and we are done for the day.
It's really important that you look at what happened today. If you wait until tomorrow, or you're a practice that is closed on Fridays and you don't look at Thursday stuff until Monday, what happens is what you remember on Monday morning or Monday afternoon about what happened last Thursday is pretty small. everybody has that same temptation at 5 o'clock or whenever your practice finishes. You know, it's like the whistle blows and you want to get up. But as soon as you postpone taking a look at the end of the day, stuff gets dropped. And embezzlement is one reason that we're doing this. Another is, you know, stuff just gets missed. I mean, there were x-rays taken today that for whatever reason didn't get entered into the practice management software. And, you know, x-rays aren't huge dollars, but if that's happening with some consistency, it certainly adds up. So you've got to make yourself stay that few extra minutes and do this. Wendy talked about the necessity of printing your own reports or generating your own reports and not simply allowing somebody to put a report in front of you. And that's really important. If somebody's stealing, one of the techniques that they'll get into is called selective reporting, where they will basically teach your practice management software to lie. When you print your own reports, you prevent that. One of the important things is what's on the screen, and it's called a roll-up report. And what I mean by a roll-up report is this. If it's 5 o'clock Wednesday afternoon now, the report that I print shouldn't be for Wednesday. It should be for Thursday night and all of Wednesday. In other words, I want to catch here if somebody has come in after hours last night and put transactions through. Okay, so we want to capture everything since the last report that I printed, which probably would have been 5 o'clock yesterday. The other thing on reports, and most software has, and sometimes it has a different name, but most software will keep two different dates for a transaction. What's called the entry date, which is always the day that it's entered. And software will also allow you to have sometimes a different procedure date. So, you know, I could be entering something today that actually happened yesterday. That's true of clinical codes for treatments. It's also true of things like payments and adjustments. And when we print a report, we want to see both dates, because what that will show us is if they're different from each other, and that's not a normal occurrence. When I look at the production report for the practice, what I'm looking for is stuff that's anomalous. You know, were things deleted, and more to the point, were they deleted and there wasn't a re-entry put in? Were entries modified later? Were they backdated? And that's that difference between entry date and procedure date that I talked about before. Another thing I want to look at is appointments where there was no charge. Sure, these things happen for various reasons, and I think of a patient coming in for an ortho check as an example of where there might be a no charge appointment. But they deserve a little bit of extra attention from the doctor, because most of the time when people leave your practice, they should have to pay something. And when they don't, there's something wrong. We want to look at adjustments, and we want to look at why they're happening. And I think, I can't remember whether it's Wendy or Amber has a slide in a little more detail on this. So I'll let them talk about what's going to be looked at when you're looking at adjustments. And the other thing I'll mention, I call receivables continuity. And here's what I mean by that. Your ending receivables yesterday should be the same as your starting receivables today. If they're not, I'm back to what I said a minute ago. Something happened between 5 p.m. last night and 8 a.m. this morning. What a lot of software does is it will report on the daily production report, it will report the starting receivables and the ending. So what you need to do is really make sure that yesterday's ending from yesterday's report is the same as today's starting receivables. And when I talk about continuity, that's really what I mean. It's important that the amount of money that goes into the bank and also each individual component of that deposit match the report. So Wendy was talking about separating things into different piles for cash and checks, and cash and patient checks and insurance checks and so on. Your report gives you detail on all that stuff, and you need to look at each component. Looking at the total will cause you problems. And when I say the bank deposit matches the report, again, I'm not talking about how much money left your practice. What I'm interested in is how much money went into the bank, and there's only one reliable way to find that out, and that's to go on your online banking the next day and see what the deposit actually was. Okay, that's how to do it. Another thing that you need to look at is that all patients were checked out. So most practice management software has this concept that when a patient appears at the front desk, they get checked in by a staff member, and when they leave, they get checked out. If they're not checked out, what you really have is an appointment for which there's no charge, because the only way to charge somebody is to check them out. So you have a no charge appointment, and it doesn't show up in your report as a no charge appointment. So you need to go back to your appointment book in your software, and normally the appointments are color coded differently, or there's some differentiation from patients who are considered by the software to still be in the practice versus those who have left. So we want to make sure that we're not missing any patients there. The other little complication, and this goes back to something Amber mentioned a few minutes ago. You know, the first dental office I ever worked in was in 1989, and in those days, when patients paid by credit card, you used that machine Amber was talking about. You know, I used to call it the knuckle buster. And you made the imprint on a slip of paper. And this is the important part. The slip of paper you used to deposit into the bank like it was a check. That's not what happens anymore. Now we have a merchant terminal or a swipe machine, whichever way you want to call it. And what the swipe machine does, among other things, is it creates a timing difference. So when a patient pays by credit card today, your practice management software records that as received today, but it typically doesn't hit your bank account for a couple of days. And what that means is that as the practice owner, it's not enough to see revenue in your practice management software. You need to come back to your bank account a couple of days later and make sure that that credit card deposit actually did make it into your bank account. So you need some system for these deferred deposits. And we mentioned at the beginning that we have a spreadsheet called the monthly monitoring spreadsheet. One of the things it's really helpful for is tracking those deferred deposits. But if you don't use that, you need some kind of system. You can't just forget about these things and assume that they're going to come into your practice later, because if you do, it'll bite you in a sensitive part of your anatomy. And the final thing to do is enter the production and collections into that monthly monitoring spreadsheet. One of the things the monthly monitoring spreadsheet does is it totals all the day sheets you enter, and that's what gives you a chance to sit there at the end of the month with a month-end report and say, okay, does that add up to the totals column on my spreadsheet? And the report you look at, put your initials on it and secure it. And by that, I mean lock it up somewhere where you have access and nobody else does. Or if you're using electronic reports, then they need to be in a secure electronic place. And your IT people can certainly set up a part of your network that you have access to and nobody else does.
Thank you, Dave. That brings certain topics, especially that spreadsheet. And I would like to talk now about one thing now that has truly always mattered to me, and that's adjustments. As I mentioned earlier, I recommend you have a team member do their own report if you're a provider. And the reason that matters is not only what you completed for the day, but also what you're adjusting. And the main reason I see an issue with adjustments is adjustments are common, especially with the insurance companies that we are in network with or we take from patients. But we need to make sure those adjustments are detailed and specific. So if you are a practice owner or a provider or an office manager, whatever your role is in the office, you want to really pay attention to those details, because if every adjustment just says miscellaneous or PPO discount, when you go back and you look at what really happened, you don't have the details. So we recommend a detailed explanation. You know, if it was a frequency issue that insurance wouldn't cover, we really want you to go into detail and understand why you're doing those adjustments and why that money may not be collectible. The other thing is how large are your adjustments? Are your adjustments small amounts, or do you have big, huge amounts? And that way you and your team can come together and get more detailed and make sure your insurance and your business is running smoothly and efficiently, and you're verifying and you know all the details of what you're able to do for patients. And then the other thing is timing. We want to make sure that, you know, those adjustments are not all done at once at the end of the day. Sometimes we recommend that, you know, adjustments only be limited to the practice owner, because we want the owner to understand what's going to happen. So when we're talking about timing, you know, it's hard to talk to somebody 16 or 20 times a day to do those adjustments. But if everybody in the practice has to contribute and have the details and understand what the adjustment came from, why it's happening, and really have documentation of it, it helps protect you more efficiently.
Amber, if I can jump in for a second, the thing that doesn't dawn on all staff members in your practice is that there's a bigger purpose to adjustments than simply bringing somebody's balance down to the amount of money that's actually going to come in. I mean, those adjustments are used for all kinds of other things. For example, to look at your bad debt collection policies that I think Wendy's going to have something to say about in a minute, to decide whether you're going to stay with a certain PPO or go out of network with them. To look at, you know, if you run any kind of marketing discount program, to evaluate how it works. I mean, adjustments get used for a lot of other, for a lot of purposes other than just kind of fixing somebody's balance. So when Amber says it's important that they're classified, that's really why, because then you can aggregate and make decisions based on it.
Right. And that's where I talked about categories matter. So you know the exact reason. You know, are you doing, is it a membership discount? If it's an insurance adjustment, what is the true meaning of that insurance adjustment? We should not see everything fall into just miscellaneous all the time. Miscellaneous is not our friend.
And if you are making a lot of miscellaneous adjustments, probably you need more categories. My rule is always that if there's a miscellaneous adjustment, there needs to be a detailed explanation in the notes. And among other things, that if you enforce that, that'll discourage staff from going to that one too quickly. You know, if they have to write a note each time they do it.
Yeah. And as we talked about, you know, a lot of these adjustments, we recommend that they be the practice owner has to approve these adjustments. And that's the specific reason we want these categories to matter, so that at the end of the day, when the owner takes a look at these reports, you know, they can talk to the staff who initialed their report and say, I want the details of why this adjustment occurred. And they know realistically if it's done in the right way or not.
Well, it's Webinar Wednesday, and my name is Wendy, so I get to talk about the dreaded write-offs. The first thing that we need to realize about write-offs is exactly what Amber was saying, in that there is a difference. I don't mean to go really deep into accounting terms, but I want to make sure that we're clear on this. There is a difference between a discount, an adjustment, and a write-off, right? And the timing of when they happen. So a discount, a senior discount, a civil discount, whatever you want to give, that needs to occur at the time the treatment fee is presented or entered onto the patient's ledger card. Right? So you enter it in at the gross value, and then you enter it in at the gross value, and then take the discount off so that you get your net value. That's the beginning. If sometime between the beginning of treatment and the ending of treatment, you need to make an adjustment for whatever reason. Let's say you need to make an adjustment for insurance, for PPO allowance, or fee-for-service allowance, or a patient is upset about something and you just want to give them a courtesy and take some money off of that. That's an adjustment. Write-offs need to be specifically reserved for money that is owed to you for services that you have already performed, but you are not going to get that money because you have to write it off due to non-payment. Speaking of money that's written off due to non-payment, one interesting thing is I have a case right now where the client was just 100% sure that embezzlement was occurring in his practice because the write-offs were so high. Well, as the examiner, once I got into all of the specific write-offs and doing my forensic audit, I really found that his write-offs really weren't that high. And here's the best news about that. Every patient chart that I visited and every patient ledger that I visited had copious amounts of notes regarding the collection activity that the staff member had done before they had written it off. Going back to types of adjustments, we figured out what was happening in this gentleman's practice wasn't embezzlement. Rather, it was that his staff member was using the term write off bad debt just strictly to remove money from the patient's account instead of using an adjustment, right? So there's another reason why it's important to know the difference between these different types of money or these different type of accounting categories that are being taken off of a patient's account. So the cause and the cause should definitely have documentation. The collection activity should be detailed. The reasons why, conversations should be done as well, or should be documented as well. And then, as Amber said, of course, we recommend that the business owner do the write-offs personally. So we also understand that there's some hindrances with that in regards to practice software and the way that some of the rights are grouped together. And also some business owners will say, I literally don't have time throughout the day to sit down and write off bad debts and do the research on them, right? They don't have to be done immediately. Look, by the time you're getting ready to write off a past due account, it's been lagging behind a minimum of 90 days, right? You don't have to do it exactly right at that moment. You could take some time later. And one of the best things about a practice owner or business owner either doing the write-offs yourself or reviewing the write-offs on a monthly basis is that it can tell you exactly how your systems are failing. In what area did we fall down? So here's a good way to think about write-offs that my friend Debbie Long, who's also an examiner at Prosperident, this is what Debbie says. Debbie's husband is a practicing dentist, so she totally gets it. And Debbie says, if you're going to do a write-off of money that you're owed for services that have already performed, you may as well reach around, take out your wallet and take the money from your wallet and hand it to somebody, because that's exactly what you're doing, right? In theory, yes, it is. We need to understand why our systems are failing, why we have that past due money. So for example, you're writing off a whole lot of insurance money that's not paid. Well, possibly your staff members could be overestimating what insurance is going to pay for your patients. If you have a lot of write-offs for patients that are just delinquent, a question might be, why didn't we get that payment from that patient when they left the office? So it gives you a clue on areas that are weak in your office that need to be reinforced. But, you got to remember that just because you write off a balance doesn't mean that it's completely gone, right? I mean, you could turn it over to a collection agency if that's what you choose to do. Another thing could be a patient could come in several years from that point after it's been written off and they're needing future treatment. And then that would be an option for you to write that back on. I remember when I worked in an orthodontic office, I was up at the front desk working with someone during lunch, and in walks this patient. Ooh, I'm afraid to say it. It's going to make you cringe. She walked in the office and she hadn't been in 8 months. And in looking at her chart, everything was documented precisely. The letters were sent, the certified letter to protect from abandonment was sent, all of that. There was just no response. Well, she walks in about 8 months later and she's got $3,000 in cash in her hand, right? And she's saying, I want to finish my treatment. I'm so sorry I disappeared, right? So there's always hope that money can come back to you. But one thing that we do need to be very aware of is that each individual state has their own laws governing collection policies within your business. And when you can collect and at what limit you have to just cut that patient off and write off the balance.
Let's talk about when you send money to collection and how you treat it in the practice management software, because that's something I think a lot of offices are a little bit unsure of. The first thing is the obvious. We need to flag that chart. You know, you feel kind of stupid when you end up treating some patient who's got a balance from 3 years ago that's been sent to collection. So we need to flag the chart. Most practice management software will let you color code the patient's file when it comes up so that you don't end up doing this by accident. The second thing is, if you're not going to allow the patient to reappoint with you, you really need to tell them that, and most states kind of want you to send some kind of certified mail to the patient to let them know that they're not eligible for reappointment in your practice. This is the one that a lot of people don't do, and I think it makes your life a whole lot simpler. When you send money to a collection agency, typically they work on a percentage of what they recover. So if their percentage is 40%, for example, as soon as you send it to the collection agency, you've lost that 40%. I mean, even if the collection agency gets full payment from the patient, you're only ever going to see 60% of it. So my suggestion is, when you send something to collection, make the write-off then of the collection agency's fee. And that's just acknowledging really the best case scenario. I don't like writing the whole thing off, because then, you know, it sort of gets forgotten about and that patient may get reappointed. I mean, we want to know next time we touch their chart that they still have a balance. But to me, it's a whole lot easier just to recognize the part that you now know is never going to come in. And as I say, leave the remainder on the books.
So now we've talked about the daily system and what we need to do to look at all the details and how to know when to send somebody to collections. But the final piece of this puzzle is we still have to keep this system going and have a month-end system. The main thing that we recommend for your manager, your staff, your team members is at the end of each month, they close all of the statement out, the month out in your practice management system. This allows you to know that everything is done and completed. And then the other thing is, you want to make sure you're generating and sending statements electronically and even physically, if patients don't have an electronic communication method, to your patients. Like David was saying, there's a lot of states that there's certain requirements on when you can send them to collections. So you want to make sure you have a good monthly system to keep that accounts receivable healthy and make sure that it's going to be able to reconcile and match on a daily and monthly basis. Then you want to look at your overdue insurance claims and determine the follow-up action, so that when you look forward in the future, you don't have a lot of adjustments that could have been prevented.
Sorry, Amber, I got busy answering a question there. Forgot about you. The owner has a few things to do as well. I'm giving you some reports that I think are good ones for you to look at. And I'm using generic names here. They may have slightly different names in your practice management software, but we want to look at receivables, and I suggest looking at it two ways. With credit balances included, and then filter them out. And sometimes, especially if somebody's embezzling, they will create a lot of credit balances to hide what's really going on. And you get a very different window into the practice when you turn off credit balances and you only look at debit balances, in other words, when patients owe you money. We should look at deleted transactions, modified transactions, and adjustments. So those are three reports that your practice management software can normally produce for you. We also, of course, want to look at our monthly production and collection report from the practice management software. And assuming you're working with a collection agency, they send a monthly report, and you want to look at that and compare it to your practice management software to ensure that stuff's being treated properly. So to me, that's what you look at the end of a month. There may be other things you want to look at. You know, we're not really talking here about what are sometimes called KPIs or key performance indicators. This is just nuts and bolts reports from your practice management software. And Amber talked about staff being required to close the month in your software. What you need to do is check that. Here's the significance of closing a month. Once a month is closed in most software, you can no longer post transactions into that month. So you can't adjust stuff, you can't delete stuff, you can't do anything to that month once it's closed. That's kind of like putting a big padlock on it. If staff are embezzling, one thing they're often reluctant to do is to close past months. So, doctor, you need to look at this. How do you tell if a month is closed? It varies a little bit from software to software. If you're not sure, this is a great question to ask a trainer from your software. Different software shows it different ways, but you can always tell if a month has been closed. So that's something you need to police. And the other question is, do the daily totals articulate to the monthly total? And our spreadsheet will do that for you really nicely. There are certainly other ways to do it, but that monthly spreadsheet, and again, I'll remind people on the follow-up email, which is going to come out in about 22 minutes, you will get a link to download the monthly monitoring spreadsheet. And the other thing we do with that spreadsheet is we cross off deposits, including those deferred amounts that we talked about. You know, when a patient pays by credit card today and it doesn't show up in your bank account for 2 days, the monitoring spreadsheet helps you with that, because basically there's a space for you to check off each deposit as it appears. So that's what you do at month end. There's not a lot of time in all this, believe it or not. I mean, this is probably a half-hour activity.
So let's talk about a little audit. Now, we love forensic auditing at Prosperident, but I realize you really don't like that very much. But a great idea is every now and then to select 10 patients per provider in your office and follow through exactly the financial processes that have gone on with that patient. Of these patients that you select, of course, you'll want to select the patients that are past due, because you want to figure out what exactly happened with that patient, why they have an overdue balance. Dave, why they have an overdue balance, where that balance has come from. Is it a failure, just to collect the money when the patient leaves, or did something else happen with that particular patient or their insurance balance? Because of insurance. Also, we want to select patients that are in current treatment and grab an EOB from just some random patients, grab it, and then follow the process through that EOB, through their treatment, through the EOB, making sure that the EOB is correct, that the adjustments are correct, that the payment that was posted is correct, and that follow-up has been done on any insurance claim that is outstanding. So now for a general dentist, this might be, a good current treatment patient to look up would be a high dollar volume appointment, say like a crown. Before you see that crown, let's follow the process and make sure that everything is in place for that. Or for an orthodontist, it might be taking a look at a couple of patients that are set to be debonded within the next month. Looking at, what's their account look like? Is their account paid off? Or if you've extended payments beyond their ECD, or is that patient set up in the proper way to make those payments even after you remove the braces from at the debond appointment? So now we're going to talk about one of my favorite subjects is reconciliation. And it's true. One of the reasons why I love reconciliation, and I believe it should be incredibly detailed, is because in almost every single case where I have confirmed embezzlement, it always showed up on the reconciliation report somewhere, right? It always shows up somewhere if you're looking for it. Now, I have a friend of mine who called me to tell me about this wonderful new reconciliation process that he had implemented in his business, and it is going to save him so much time. So I'm interested to hear this because I spend a lot of time doing forensic auditing. He tells me our new system is that we take what money is listed as deposit on the bank statement and on the merchant statement, and we enter it into QuickBooks. Okay, well, you guys know that Amber and I are both from Texas, so I had some really choice words for him, but he was my friend, so all I could say is, darling, bless your heart. And then we had a conversation about the right way to reconcile, right? Here's why that was such a bad idea. And here's what you should do. You take what comes from your bank and you reconcile it to your practice management system. Just as Dave said earlier in our presentation, these two systems are actually different. Your practice management software and your accounting software, they don't link anywhere. So your reconciliation using your bank statement from the third party, which would be your bank, is actually the only link that you have to make sure that those transactions are correct, right? Also, same thing with your merchant accounts, and same thing with any third-party lenders that you have, like Care Credit, Care Credit, OrthoBank, whatever. Look, I know this is a really arduous process, and there's just no easy way out of it. It is so important. That does not mean that as a business owner, you have to do it yourself. You can hire a bookkeeper to do it, or you could hire, there are so many companies that work with us in our practices remotely now, and they would be happy to do bookkeeping for you. And it would just take them a couple of hours to go in. They could access your PMS and make sure that your accounting software matches your practice management system information, as well as your third-party statements. The thing that we don't want to happen is that the person who's doing your reconciliation for you should not be the person who's posting payments in your software, nor should it be the person who's responsible for the end-of-day procedures each day, right? Because I can manipulate any data to say anything I want, but without that double check of a reconciliation, right? I have free reign to do whatever I want. So be careful about who you have doing the reconciliation. It should not be somebody that has permissions within your software. The final point I'd like to emphasize is that I speak with a lot of business owners who are surprised when I confirm embezzlement with them, and they always say, why didn't my CPA catch this for me? My CPA reconciles my records for me. They should have caught this. Let me tell you, take it easy on your CPAs, because reconciliation is not what they do, right? What your CPA does is they take the different accounting mechanisms within your business and they categorize them. Your expenses, they categorize employee expense, marketing expense, office supplies expense. They don't reconcile. Now, you can ask your CPA to reconcile for you and have a special contract with them so that they'll perform that work for you. But again, here's the key. If your CPA is only reconciling your bank statements to your accounting software, you're missing the most important piece of the puzzle that can detect embezzlement. If your CPA is reconciling for you, which you need to confirm, number one, but if they are, number two, those daily day sheets need to be sent to your CPA every single day so that they can confirm they're correct.
Yeah, again, the important thing, and I fully get that a lot of you right now are saying, you know, this seems arduous and I didn't go to dental school to do this. And I agree. When we talk about outsourcing, as Wendy says, it's got to be somebody who is not in your practice every day. This should be somebody who has no access to the cash in your practice, no access to the incoming funds. If you delegate these duties to your office manager, it's kind of like handing the fox the keys to the henhouse. We need to outsource this stuff as opposed to delegate it. And yeah, Wendy said that, but I just really want to reemphasize. So how much time does all this take? If you're organized and if the staff do their jobs right, it should be around 10 minutes a day and around half an hour a month. If it's taking a lot longer than that, something is wrong somewhere in your system. But I'll go back to what we said at the beginning. If your staff is not balancing and or you are not overseeing that process, you have left this big door wide open in your practice that money will fly out of. And the lady on the screen is from a case that Wendy did, and you can see the number that went flying out that door. So let's stop the easy theft. Will thieves try to evolve to more advanced stuff if they feel like they have a need to steal from you? Absolutely they will. But we see theft that happens. We see all the time theft that happens because there's no oversight of staff in terms of the financial operation of the practice. So let's shut that down. Ladies and gentlemen, it's been an honor to have you with us for the last 5 weeks. We thought that we'd all be sort of taking a little bow now and thanking you, but we did make the decision to do one more. So we're back next week, where we will be talking about how to end an employment relationship. And there are a lot of different facets to that. You know, everything from the best day of week to let somebody go to how you give references after you've let somebody go and you get calls. We'll talk about all those things. So same time next week. We do not have, normally the message that goes out at the end of our session, which is in about 10 minutes, normally that will have a link to sign up for next week. We haven't even built it yet. I mean, we decided literally half an hour before we went live today that we were going to do one more. So we don't have a link for you yet. We'll definitely send one out probably Friday, so that you can register again for next week if you have time. And as you know, we record all these, so if your practice is getting back to work and 3 o'clock Eastern is not a convenient time for you and you can't be with us live, that's totally fine. We record it, and we're happy to have you tune in later. So with that, let's turn this over to questions. I see we've done a pretty good job of answering some that came up as they did, but there are probably some more. So let's see what people want to ask us.
I'm sorry, Dave. We got a whole bunch of questions about where to get the spreadsheet.
Yeah.
If you mentioned that, I apologize.
No, let's say it again. So the post session email goes out in about 10 minutes from now, and on the email are some buttons, and they're color coded. You know, there's green ones and red ones and blue ones. The red one is I need your help. One of the green ones is download the spreadsheet. So if you click on the link for that, it will download the spreadsheet for you, and you can have it right there. If you have any problem with downloading and you want to, just email us, and you can see my email on the top there. Just email me, and I'll make sure that you get it directly. So everybody who wants the spreadsheet will get it, no problem.
Dave, we have a question. They want to know, how do we convince a dentist to protect him or herself? What is the best way?
Remind them that it's all about their wallet. You know, if you want to do dentistry for free, that's great. I have no concern about that. There are lots of dental missions that would love to have you. If you want to do it and get paid for it, now you have to treat it like a business and not simply a health profession. So that would be my answer. There was a good question that I gave a quick answer to, but I'm just looking for it because I'd like to give a little bit more detail. And what somebody was asking about was, they said, okay, we have a multi-office, multi-doctor practice. And the stuff you're talking about, David and Amber and Wendy, kind of sounds like it really is oriented to a single location, couple of doctor practice. And that's absolutely correct. What I will say is that exactly the same functions need to happen in a multi-practice office or a 500 practice DSO. The same stuff has to happen. It just may happen by different people. When you own multiple practices, though, you need to follow the same principle of not having the people who are in an office taking in the cash and recording, taking that in, doing the oversight. That's not going to work. So you need somebody somewhere who is distinct from that office and has no access to the incoming funds or anything to do the oversight. So you have the same problem. The solutions might be a little bit different, but thank you. That's a great question.
Okay. Sorry. Go ahead, Amber. Okay. Sorry about that. Dave, I kind of have two. I'm just going to rapid fire them at you.
Yeah.
Okay. Ron sent this question in, and I jotted it down. So Ron, if I don't get it right, you might want to write me back and let me know. It says, how do you balance the changes in the numbers after the fact? What I think he's referring to is if you run maybe a double day sheet he's referring to, or
yeah, okay.
Some things I think we might not want to discuss specifically here.
Yeah, I think there are a lot of facets to that question. A common complaint we get from people is, I print the month of April at the end of April, and I print something pertaining to the month of April 3 months later, and they don't line up with each other. We get that kind of thing a lot, and it comes from a couple of different places. Sometimes in software, and some software is more fussy about this than others. Different reports use different assumptions. And in one report you may be looking at gross fees, and in another report you may be looking at adjusted fees or something like that. And that, of course, is going to cause the numbers on those two not to look like they line up with each other. The other issue is if past months are left open, then it's very possible to post a transaction into a past month, and that will cause exactly what we're talking about, where what is printed in April for April does not line up with what's printed in July for April. So that's where it's important that we close months. We do not want transactions to be posted into past months.
Right.
If somebody made a mistake in a past month, what they really need to do now is post a correction in the current month. Not go back and rewrite history, because that causes all kinds of problems. And one question that somebody asked me that was kind of similar to the one that Wendy was talking about came with, but if we close months, then we can't go and fix stuff in those months. And my answer was exactly, that's what you want. If somebody screwed something up in April and it's now May, the fix needs to happen in May, not April. And there are really very few exceptions to that.
Okay, and then someone else, when you were talking about sending written off accounts to a collection agency, and you had said, go ahead and write off the collection agency fee, but keep the remainder. I think a couple of people were a little thrown off by that verbiage.
Okay, so let's say you send $100 out to collection. And your collection agency, if they collect the money, will keep $40. In other words, they charge 40%. Okay, let's assume that and then discuss that one. So what happens is when you send that to collection, you've immediately lost $40. And to answer the question that I saw somebody ask, you cannot you cannot recover that from the patient. In other words, you can't get the collection agency to collect $150 so that there's $100 left after. That it doesn't work that way. When you send out to collection, you eat their fee. So when you send that $100 account to collection, the most you're ever going to get for it after that, if the patient pays the collection agency, the most you can get back is $60. So what I'm suggesting to you is when you send it to collection, write off the $40. And now what's left on the books is $60, which is really your absolute best case scenario. If the patient ends up not paying or they make a partial payment, you may have a further write-off, but let's acknowledge right now that we're never going to get $40. That's really what I'm suggesting. What I don't want you to do is write off the other 60, which is kind of tempting because the dollars that come back when you send stuff out to collections usually fairly small. It's tempting to write the whole thing off. The problem is when you do that, you sort of forget about it. And I don't think you should do that. So hope that clarifies, Wendy. I'm not sure if I really nailed it there, but that's what I was saying. Take the hit that the collection agency is going to take from you right now.
So Dave, here was a question. Someone was wondering if there are any systems that you like that are better for taking cash, check, credit cards, or services rendered at that time.
Absolutely. I think COVID has given us the excuse to do something that probably a lot of us have wanted to do for a long time. And that is, don't take cash. A lot of our cash is, first of all, it's the most tempting target for thieves. I mean, thieves will steal checks and find ways to cash them, and they'll intercept credit card payments, and they'll redirect EFT deposits. I mean, they can do all of those things. Any form of payment to you can be stolen. But their first choice is cash. And it's also harder to account for. And you saw that system that I gave you where you break cash into the two pieces, petty cash that's for disbursements and float cash that's for receipts. A lot of that goes away if you just don't take cash. So one thought that I have is that, one of the problems with cash is that it gets handled by a lot of people. We could debate for a long time how long COVID will live on the surface, but to me, it's really easy. And just to say, for the health and safety of our staff and the other patients in the practice, we no longer accept cash. and let's kind of force people into one of the other payment forms. To me, the only really important thing about that is that people need to know about that in advance. In other words, somebody should not be standing in front of you having just had treatment and learn at that moment that you don't take cash anymore. This is something that needs to be communicated, well in advance so that people can be ready for it. But I know of very few people today who don't have, a bank account with a debit card or they have a credit card or something. The only exception probably is as you get more rural, and if you're in a community where there are a lot of, for example, migrant farm workers and people like that, they're the ones who really tend not to have bank accounts, at least that they can get at. So that might be a case where it's difficult to implement that. But, if you're in an urban practice in Houston, I personally don't think it would be all that hard for you to simply say, we're just not taking cash anymore.
Okay.
All right. I'm finding this hard to believe, but it looks like we got most of the questions answered. We're in unfamiliar territory, guys, because we've never gotten there before. So I'd like to thank my wonderful co-hosts who put a lot of work into this behind the scenes to make it happen every week, and I just want to acknowledge them for that. We all thought we'd be sipping margaritas next week instead of being back with you, but we had such great response today, and our registration today didn't quite set the all-time record, but it was pretty darn close. So we said to ourselves, we just can't leave these people who have come to depend on us every week for their entertainment. So we'll be back next week. We're going to talk about, as I say, how to end the employment relationship, and we'll have some good stories about some of the things that went wrong. So you all get the chance to vicariously learn from the mistakes of others and kind of snicker and say, yeah, that never would have happened to me. But we will talk about all the things that go wrong. So we'd love to see you back next week. If you're back at work earning money, don't feel bad about that. I've loved getting emails this week from people saying, yeah, I can't make your webinar on April 6th or May 6th because I'm back at work. That sounds so good to me. But we will be here and we'll have a lot of great information. So we hope whether you're here with us live or you join us later, that we can see you next time.
Yes.
Yeah.
And we'll make sure you get the right link. If it kills me, we'll make sure you get the right link. All right. Thank you very much, everyone. In case you're wondering what we look like in big screen, that's it.
Oh, wow.
Yeah. Look at us. And we'll see everybody next week. Have a great week.
Thank you.
Bye.
This concludes this episode of the Prosperident webinar series. The team will be back soon with more tools and ideas. If you have questions about this webinar, if you would like to discuss your practice with one of us, or if there is a topic you would like to see in a future webinar, we would love to hear from you. You can contact Prosperident through its website, www.prosperident.com, or by calling 888-398-2327.